The U.S. Fed has hiked interest rates again, but this time just 25 basis points. But it comes after a couple of regional bank failures. So for more on this, I want to bring in Enoch Omololu in Winnipeg. He's a personal finance expert. Welcome to the program. Appreciate having you on.
Thanks, Anna.
Thank you. Enoch, the U.S. Fed has been boosting rates, including this afternoon, to slow down inflation. So how have recent bank failures in the U.S. affected their approach here?
I think the bank failures have made the Fed more cautious just because like the banks that did fail in the last couple of weeks were pretty much due to them holding a lot of long-dated bonds, and those bonds were losing market value with the fast increase in interest rates. So the Fed is definitely looking at it, and they are tempering their approach, I think, to an extent, just so they are not increasing the possibility of other banks getting collapsing alongside the ones that we have seen already. So I think overall they have taken a more cautious approach with this current, the most recent increase in rates, and maybe that's going to be their approach going forward. It remains to be seen, depending on how inflation in the U.S. Continues to fall.
Yeah, and you never knew that bank story was going to come about. Everything has been a bit topsy-turvy. So how should Canadian investors view these recent failures?
I don't think there's any concern that Canadian banks are going to go through this similar crisis. Like the Canadian banks are concentrated in like the big five, maybe the big six, while you have several other smaller players. It's unlike the US, where you have so many thousands of banks, like regional banks, small banks everywhere. And Canadian banks also have like just better liquidity, better capital controls. They're not like super invested in the fixed income assets like that we have seen for like the Silicon Valley Bank. And so overall, I think Canadian banking is just more resilient. And as far as I can tell, I don't see any issues or concerns that investors should be feeling, even though you could see the impact on the markets with people selling, but that's already basically getting back on track with that contagion fears and all of that just evaporating in the last few days. So I think overall, the Canadian banking system is definitely much more well prepared for things like this. And on the other hand, you also have like the CDIC, like the deposit insurance, which is smaller than what you have in the US. But I think since we haven't seen any fears or bank runs, there may be at some point maybe some reasons to look at that, maybe increase it, but that isn't an issue right now.
When it comes to the U.S. Central Bank and the pressure that's on it, are we feeling that here as well?
Yes, I think there's that pressure on the Bank of Canada, certainly. Like there's the people or the group of people who would want to see the rates go up even slightly more than they are right now. Because while inflation is sort of getting tempered and it's sort of coming down, there's still potentially a lot more demand than the supply can manage, which means we still have some inflation in different areas. So like food inflation, there's inflation in some other sectors. So there is that school of thought, if you will, that yeah, maybe the Feds need to still hike rates. And then there's just the other side, which is a lot more people who feel the Fed needs to start backing down, like the Bank of Canada needs to start backing down right away and even dropping rates. So if you think of people who have like variable mortgages, people who are feeling the pinch of just higher costs for everything, they certainly feel that the Bank of Canada should be thinking and strongly considering dropping rates. And then, so you have these two schools of thought, and who want the Bank of Canada to do something totally different. So I would say that they are certainly under pressure. And of course, they have to be under pressure because the economy rests a lot on the decisions they make, and hopefully they get it right.
What is your advice to Canadians watching all of this?
Yeah, so I would say overall, we have had good news in the last week or so, which means, or which tells us that inflation is coming under control. this gives us a silver lining in the sense that you can say, okay, potentially in the next little while, the rates are going to maybe drop back or at least pause, no further tightening. And hopefully we can start getting back to normal. On the other hand, if you're as an investor getting worried about, oh, what's going to happen with my portfolio? Is the bank run going to damage my retirement portfolio? Is the economy going to have a hard landing? Are things going to get even worse? I think the picture we are seeing currently and the data says that we may get through this unscathed, or at least much better than we thought we would over the last 3-4 months. So things are looking up overall, I think.
Okay, a little bit of positivity at the end there. I appreciate that. Enoch Omololu, personal finance expert. Thanks for being on the program.
Thanks for having me, Anna.